Capital gain distributions could hurt your Obamacare tax credits. All right, so we're going to look at the Vanguard capital gain distribution expectations for the end of this year. So remember, in December is always when you get the big capital gain and a lot of times dividend income distributions as well. And if you're in a taxable account, all right, a non-IRA, non-401k, non-TSP, non-403b, a just good old-fashioned brokerage account, and you got some taxable investments in there, mutual funds, ETFs even, this could come as a surprise to you where all of a sudden you get a big tax hit. I thought the Rob Berger suit against Vanguard was, and I don't pay much attention. I just don't care. But my understanding was from a person I trust was that he was very upset that Vanguard had significant long-term capital gain distributions. He was unprepared for that. I said that I can't believe that to be true. But anyway, this lady looked it up for me, and she kind of thought it was. I mean, we didn't look very hard. But anyway, I might be mistaken there. Anyway. Just be advised, if you have a mutual fund in a taxable account, there's most likely going to be somewhat significant capital gain distributions, especially because we had such a run up since 2009. Now, 2022 was down, but not enough to we have so much unrealized capital gain distributions for the last 15 years that you're going to get hit with some capital gain tax. And if you're on Obamacare, that could be the difference between significant tax credits because your income is low enough to qualify for significant tax credits, or losing significant tax credits because you got hit with a sudden capital gain of taxable income that you weren't prepared for. So the example I always share with people, I was members like this yesterday. This lady came to my office when I was at USA, right here in Alpharetta, slammed her American Century Mutual Fund account statements in front of me, said, I got hit with $40,000 of capital gain distributions I got to pay tax on. I wasn't prepared for that. That put me in the next tax bracket. What'd you guys do? I said, sister, I didn't do anything. I don't know how you got these American Century funds, but I mean, they had a capital gain distribution. And you got to pay it. That's how it works. That's how a mutual fund works. She goes, but I didn't sell anything. I said, matters not, sister. If you own it, you pay it. That's all there is to it. It's kind of like they say, if you tied it, it's what we have to do rappelling in the Army. And I did not very good at not tying. If you tied it, you ride it. You're like, that means if I tied it, I could die with that rope, with that rappel going on this 50-foot cliff. Some people like that stuff. I said, no, I just like to take the stairs, please. I don't want to rappel. Just take the stairs. But anyway, so if you tied it, you ride it. And if you own it, you're paying tax on it. That's just a fact. So let's look at Vanguard's expected distributions here. Capital gains, these are preliminary capital gain distribution estimates. And we're going to start with this one right here. Diversified Equity Fund. Diversified Equity. So that's VDEGX. Let's take a look at VDEGX. Actually, hold on a second. So here, this trading at $43 a share right now, and they're going to distribute $1.50 per share. All right, so $43 a share. So we take $1.50, divide by 43, and that gives us our 3.5% distribution amount. So what that means is that you're going to get $1.50 most likely per share. All right, so let's just say you owned 300 shares of this right here, 43.76. So you own $13,000 in this guy right here. You own 300 shares. You're going to get 300 times $1.50. You're going to get $450 of capital gain distributions. That's just a fact. Now, could it be a little bit less? And I doubt it. It could be a little bit more, probably. But that's almost 4% of the entirety of the fund. I mean, literally, and that's 4% of the value of the fund. It's going to come to you as a taxable event. That's pretty significant. It's not nearly significant as some of the other funds are going to show you here. So let's just keep looking. I want to show you guys something here. So let's click on this guy a little bit more. And then you're still going to get some, you're still going to get an SEC yield, a dividend yield right now of about 1% as well. So you're still getting another 1% of income from this fund as well. So that $450 for the capital gain distributions plus a 1% dividend yield, you'll get some income. Now that in of itself, that's just on 300 shares. That's not that big of a deal. But what if you had 30,000 shares or something like that? Or 3,000, I should say. I want to show you something else here. NAV, all right here. Hold on just a second. We're going to go look at taxes. Hold on, I want to show you what I'm talking about here. All right, so here's their realized gain this year is $1.50. All right. Even after realizing that gain, that means Vanguard sold stocks in the portfolio that gave it $1.50 per share gain in the fund, which you as a fund holder the owner of the fund have to pay tax on. So that's only 3.8% of the entirety of the fund. All right, so the fund trades at $43. They had $1.50 of realized gain. $1.50 divided by 43 is $3.80 roughly per share. But check this out: a quarter of the fund is unrealized capital gains. $10 per share is yet to be realized. Now that doesn't mean it will be realized, but look at that: $9.91 per share on a $43 fund is unrealized capital gain. That's a pretty significant future tax you're going to have to pay if the market keeps going up, if they ultimately realize some of these shares. And they might not. Just because they have doesn't mean they have to. But I mean, that means there's potential for more capital gains. This is why we want index funds, because index funds don't have all this. Let's keep going. I'm going to show you what I'm talking about here. Let's go over some other funds here. All right, so we're going to go down to, I'm looking, oh, look at this guy right here. Equity Income Admiral, 5.1%. So that's $4.10 per share. So that's VEIRX. VEIRX. Let me go up here. VEIRX. Type in that. So here you're getting a 3% dividend yield first and foremost, plus you're going to get that capital gain distribution. So we're going to come down here. Let's keep looking down here real quick. The banjo on my knee, right here. 12.46% of the fund is unrealized capital gain. So you can see they have a bigger realized capital gain this year, $4 a share, all right, plus whatever dividend. I mean, that we had 20 and it was trading at $85 a share. So let's just say you had 500 shares in this guy. 500 times 80. What's it trading at? 85. So you had $42,000 in here in a brokerage account. So how many shares did we say we had? I forgot now. 500. You got $4.50, and that's $2,250 plus another 3% dividend yield, man. I mean, that's a taxable event that you're gonna have to pay tax on. That could affect your Obamacare. Let's keep going. So these are all the very small ones. If it's less than 5%, not really a huge issue. Anything more, oh, look at this. Growth and income. Oh, that's going to be bad because that's going to have some dividends and income here too. So 7 point. I just want to see if they have anything over 10. Last year they had a couple things at like 10 and 12%. I don't see anything. Well, isn't that interesting? Isn't that interesting? I'm not seeing any index funds. Why would that be? Because index funds, except we got this one right here. That's it. Only 0.93. Institutional. But no other index funds. Very interesting, is that not? Yes, it is. Because index funds don't really have any active, they're not actively managed. And because they're not actively managed, there's not much turnover. If there's not much turnover, that means the buying and selling of stocks in the fund or bonds in a bond fund, there isn't much capital gain taxes to pay. And index funds for Vanguard have some kind of patent where they don't even have to pay capital gain tax. It's crazy. It's crazy. Awesome. So you definitely want index funds inside your brokerage account. You want your actively managed funds in your IRAs, index funds in your brokerage account. If you got to switch between the two. All right, so let's type in this guy here. What was he said? Equity income fund? No, that was the equity. Growth and income fund. Oops. Hold on a second. That's my own YouTube video. Let's promote that. If you're not following me on Facebook, I am on Facebook, by the way. I did get back on Facebook. So follow me on Facebook. It's all good. It's all good. You want, and that's why I like to post some of my videos on Facebook. Just it keeps doing that. Okay, hold on just a second. Why are you doing that, man? VGIAX, VGIA, and I got all that links down in the doobly-doo. VGIAX, Growth and Income Admiral share. So $93 a share. So if you had $100,000 in this for simplicity, not getting much of a yield there. That's surprising. I would have thought there'd been a bigger yield because it's growth and income. Not much. But we're going to get a pretty significant tax hit on these guys. What's that? 8.3. Okay, never mind. Right there. 7.79. So if you had 1,000 shares, you're going to get $6,000 and $6,690 of capital gain that you have to pay, and then you still got 20% unrealized capital gain. Isn't that crazy? Nuts. Let's just type in while we're here. We're going to type in VFINX. That's the Vanguard S&P 500. Let's just do, we'll do Admiral shares, doesn't matter. We'll just do this guy. Crack out. You made me crack out. Dividend yield 1.46, 4 basis points expense ratio. Your fees are too high, says the Centers for Retirement Research or whoever the hell it was. Your fees are too high. All right, look at that percent right here. But look, realized gain. It's a loss. What? Look at that. Because there is no turnover in index funds. So percentage of unrealized capital gains is a percentage of NAV. There's no buying and selling. They turn over about 3 to 4%, not very much. It's very tax efficient. Distribution scheduled quarterly. Dividend capital gain. What? I'm seeing dividend. What? Dividend. Let's keep going down here. But there's no capital gain distributions. Why? Because the index funds don't pay capital gain distributions. I don't know how Vanguard did it, but they did it, and it's awesome. I can't vouch on other index funds. I got to get a haircut. My wife needs to cut this mop. Look at this dude. Look like a hippie. We don't burn our draft tars down in that Main Street like those hippies down in San Francisco do. Freaking call me. I'm proud to be a hippie from Milton, Georgia. All right. So double check to make sure you don't get swamped. All right. Love your thoughts. Don't forget, follow me on Facebook down there. Sign up for my email list, and we'll see you guys next time. Thanks again. God bless.